Get ready to see the rise of the electric giant Tesla, which has ambitious plans to reach the mass market by 2020 and deliver 20 million electric vehicles. Tesla is putting all of its resources towards revolutionizing the automotive industry, but the company is also heavily focused on renewable energy with a new factory in Shanghai that will produce megapacks. In this video, we'll examine Tesla's ambitious plans for entering the energy storage market, as it appears to have a bright future. So buckle up and let's take a closer look at Tesla's electrifying future. First things first, if you're not yet subscribed to our channel, this is your time to hit that subscribe button. Make sure by the end of this video, make sure to give it a big thumbs up and the benefits of its new factory in China. Tesla has set its sights high with plans to deliver 20 million vehicles by 2020, giving it a massive 24% market share and making it the top automaker. They've laid out a roadmap for achieving this lofty goal by cutting costs by 50%, enabling them to penetrate the mass market and capture 50% of the market share. They plan to do this by cutting costs in the powertrain, batteries, and general assembly in order to do this and expand their reach into new markets. They intend to establish a new facility in Nuevo León, Mexico. Along with the advantages of being in Mexico, this location also provides access to a skilled labor force, lower labor costs, and close proximity to important trade routes. By producing their vehicles in Mexico, Tesla can also benefit from the $75,000 IRA credit, a tax credit available to American buyers of electric vehicles that can lower the price of a Tesla. By exporting vehicles from their new Mexican plant, Tesla can continue to be eligible for this credit and pass the savings along to their customers. Mexico also has several tariff treaties with countries in Latin America. Tesla can benefit from these agreements and offer their products to customers in Brazil and other Latin American nations at a lower price. Overall, opening a new factory in Mexico for Tesla seems like a wise move because it will allow them to save money and reach new markets, positioning them for future growth and success. As a result, many investors are feeling bullish about the company's prospects and optimistic about its performance. At Tesla's recent Investor Day, they display a lot of management talent, which was reassuring. In addition to producing excellent EVs, Tesla also makes solar panels and batteries to store renewable energy, which is crucial for the transition to clean energy. In addition to investing $5 billion in a new gigafactory in Mexico, Tesla has also taken new steps to support its low-cost EV production. The energy business is another growth driver, with $801 million invested in energy generation and storage revenue. Some analysts have high hopes for Tesla's energy division and see it as an underutilized catalyst. In a recent note, Tesla investor Gary Black predicted that Tesla Energy would generate about $20 billion in revenue and $8 billion in gross profit by 2023. This is a sizable forecast that suggests investors shouldn't pass up this opportunity. Tesla was praised by Kanakogi and Ueti as a sustainability. Tesla's future appeared promising, and the company has a strong balance sheet to withstand any potential recession, Behemoth pointed out, citing its electric vehicles, energy storage platform, and dominant position in both markets. Tesla recently announced plans to build a factory in Shanghai to produce its Megapack battery, expanding into China's market at a time when 10 US companies are building factories to produce solar and energy storage products for clean energy purposes. In order to produce 10,000 units annually for global distribution, the new factory is expected to break ground in the third quarter of this year and begin production in the second quarter of 2024. The second largest market for Tesla, accounting for almost a quarter of its revenue in 2022, is China. The company's car plant in Shanghai is responsible for about half of its global car deliveries, serving both the domestic market for vehicles in China and the European Union. With a population of over 1.4 billion, Tesla's success in China has been crucial to the company's global growth strategy. China is the largest automotive market in the world, and as such, it offers Tesla a significant opportunity. As the first foreign automaker with a wholly owned factory in China, Tesla started producing its own gigafactory in Shanghai in late 2019. Since then, the company has been able to capitalize on China's strong demand for electric vehicles, EVs, and the nation's efforts to reduce carbon emissions. The Model 3 and Model Y, the company's most popular vehicles, are produced at Tesla's Shanghai plant, which has been crucial to the company's growth in China. By producing these vehicles locally, Tesla has been able to avoid China's high import tariffs on foreign-made goods. In addition to satisfying local demand, Tesla has increased its market share in China's EV market, which is already the largest in the world, by making its cars more affordable for Chinese consumers. Additionally, Tesla's Shanghai factory is in charge of exporting vehicles to other markets. In 2020, the factory shipped over 30,000 Model 3s to Europe, boosting the company's overall sales. This has made it possible for Tesla to benefit from China's affordable labor costs and its extensive network of trade agreements with other nations. Overall, China has been a key market for Tesla in recent years, and its success there has played a significant role in the company's growth. If you're unaware of how significant this could be for Tesla, the rising demand for grid storage batteries in China as a result of waves of blackouts in 2021 has created new opportunities for the company's energy storage products. For example, many provinces now mandate that new solar and wind farms have enough batteries to store a certain amount of the electricity they produce. Look out in the upcoming months. Please click the like button if you think the company's expansion into the renewable energy and battery storage markets will be successful. Become a member and enable notifications to stay informed about Tesla news. Returning to the subject, the installation of electricity storage systems has resulted in an enormous increase in the demand for energy storage throughout the world. China is the industry leader in producing rechargeable batteries and the chemical reactions required to make their components. Megapacks from Tesla's new factory in Shanghai will be able to store enough energy to run 3,600 homes for an hour. This kind of battery is affordable and excellent for utility-scale power storage, making it perfect for storing wind and solar energy for use in the future. Elon Musk revealed Tesla's second phase of its master plan in 2016, which included expanding the electric vehicle products line, creating solar roofs with battery storage, and developing sat-nav systems. Tesla's business revenue for energy generation and storage are relatively small, accounting for only 5% of the company's total revenue. However, as electric utilities transition towards using renewable energy, the ability to store electricity when isn't in demand becomes critical. Due to China's dominant battery supply chain, Shanghai was selected as the location for Tesla's new factory for a number of reasons, including its ideal location for boosting output and reducing costs. Furthermore, many American businessmen are hesitant to invest in China as geopolitical tensions between the two countries escalate. The company will be able to meet the growing global demand for energy storage thanks to Tesla's new factory, which will benefit from China's battery supply chain, despite fierce competition from domestic rivals like Warren Buffett's Backlash indexed XPON and NEO. With the opening of a new Megapack plant in Shanghai and an increase in production at their previous manufacturing facility, Tesla has reduced the price of its vehicles and provided incentives to customers. Tesla wants to stay one step ahead of the competition and keep providing the energy storage that the world needs. Elon Musk recently tweeted that the Tesla factory in Shanghai, which is in the works, will help the company's mega battery plant in California produce more products. The Biden administration has been urging businesses to invest in emerging technologies, as has the Chinese government. In order to meet the rising demand for electric vehicles, the President Biden-signed Inflation Reduction Act offers incentives for rechargeable battery production in the United States. To truly produce low-cost electric vehicles, cost controls must be implemented across the supply chain, especially for batteries, in order to meet Tesla's ambitious plan to sell 20 million vehicles annually by the end of the decade. If Musk can lower the cost of batteries, according to Simon Moss, CEO of Benchmark Mineral Intelligence, Tesla will have a clear path to growth. Nevertheless, if Tesla is unable to lower battery costs, hungry rivals will be eager to seize market share. If you want to stay up to date with Tesla's recent activities, be sure to watch the next video that appears on your screen. What are your thoughts on this development? Let us know in the comments section below, and don't forget to share your opinion on the company's value.